So hoping you all can see my trading view screen. Obviously, welcome to the 800 member free webinar. I'm essentially just going to go through a couple trades, answer any questions asked, sort of thing. So if anyone has any questions, feel free to unmute your mic and just ask it, or if you want to type it in the free source chat. And then Kazi or Hugo will read it out for me, so I don't have to check for myself. But yeah, if you could all sit on mute, and then obviously just unmute if you have any questions. So yeah, what can we go through first? What has to happen for the creation of an internal range? All right, we'll start with that. So for let me make sure I'm recording. Yeah. So when it comes to our higher time frame structure and essentially how we form our bias, I made a video on this last webinar, but I'll sort of go through it a little bit again. But the way I sort of managed to understand what sort of higher time frame level we're currently at is by using obviously the Fibonacci tool to show the premium and discount levels of that swing. I use 1 hour swings, but the actual method to finding what move is about to happen during our 2 p.m. candle open for me relies on this sort of order. So first we start with the extension, which is which is quite literally just the 1 hour level breaking structure. So we use essentially reactions from previous ranges, and that sort of determines how we form a new range and how what sort of bias we're going to be in within the market. So here we have a old range that we were working between, and we've seen that high getting taken out. So that is our extension right here. We understand that obviously our range is going to be from the level that broke that structure, or started the swing that broke that structure, to obviously the high in this scenario that is now going to be formed at 4 hour or daily level. So okay, he's getting muted. So obviously when we're looking at this is the extension here with our previous high broken. And then what do we look for? We then look for our IPDR to get hit. So essentially we are looking to sell from 4 hour and daily imbalances, and obviously just normal points of interest, down to a point of interest within our discount in this scenario. However, when we come on at 2 p.m. like so, if we're at this sort of level here, our extension has been completed. Admins, if someone starts speaking with their mic unmuted, and you can just mute them for me, please. But yeah, so thank you. So we go with our extension first of all, obviously, as we can see here, and then when we come on the market, and we can see that obviously we've had a reaction from a good area for us to form our high of our range. We then look for our IPDR to get hit, and our IPDR, same exact method as our high time frame range, like so. We just use for the internal range. So this is our new internal range here, and we're waiting to hit our IPDR. And our IPDR is just the minimum level I want to see retracement to before we can continue filling our sort of external trend and imbalances like so. So obviously our range needs 1 hour imbalance. The protected low needs to sweep liquidity, break structure, and like I just said, include imbalance. So we are trying to sell down in this scenario here to our PDR. So our IPDR is our internal premium discount level, whereas our PDR now is our external premium discount level that we're looking to reverse off of. So both of these levels are the minimum I want to see retracement to before continuing the trend, obviously external like so.
We have a question about the internal range.
Go for it. What's it?
You just asked, of what does the inner range need to react off?
So the internal range itself, if you're talking about the high, for us to start creating the internal range, we need to hit a 4 hour So we need to hit 4 hour or daily valid level as an imbalance order block, not like just normal basic ICT stuff. However, that's when we start forming our internal range like so. Our IPDR can be a 15-minute imbalance, 15-minute order block, and we use our PDRs can also be higher time frame imbalances. However, we mostly just use the 15-minute for valid levels like so. But yeah, so that is the first stage of the higher time frame for myself, which is the extension here. And then after the extension, I'm then looking for us to hit our IPDR. So it goes extension, IPDR, then we go PDR, and then we repeat the same process as if we've just formed the high of the range. So now if we came on the market at this scenario here, we are then formed a new internal range, which we are then selling down to or buying from the new IPDR in order to continue this sort of cycle and continue our high time frame trend. So it goes extension to a 4 hour or daily level, then it goes buying or selling to our IPDR level. So then we go extension, IPDR, PDR, and then we go from PDR to new IPDR here. So we go from extension to the 4 hour daily, internal level, external level, internal level, and then the next draw on liquidity, which would be the high of the current range. So that is essentially how I play my market structure and understand my sort of daily bias. Yeah, that's sort of how the internal range is formed as well. It's quite simply from a 4 hour or daily level. That's when the internal range has been formed, or it will be from our PDR, which is still an external level. However, it's within our external range like so. I don't know if I have said this yet, but our protected low like so needs to sweep liquidity, break structure, include imbalance. Yeah, that is the method to my higher time frame. Does anyone have any questions about the higher time frame specifically before I move on? So IPDR is internal premium discount array. Yes, exactly. So we just need a visible low, like an example, for us to have an inner range. So the internal range in itself needs to react off of that 4 hour or daily level, or we will see it start getting created at our PDR, which is the reversal level of our external range, essentially. Does that make sense? I hope that makes sense.
Yeah, it does make sense, bro.
Perfect, cheers. Cool. Alright, let's go on to the next question. On entries, how to get smaller stop loss and when to enter. Okay, so question of when to enter and how to get smaller stop losses. I might as well go through these two trades that I have taken and I'm currently in. So essentially, my entries in itself, I enter based off reaction. I always have a 2.5 pip stop loss, no matter what. Obviously, it can vary to 3 pips, depending on what prop firm I'm trading with, as in what firm will give me the least spread, obviously. So if I trading with 3 pips, it'll be because I'm trading with a prop firm account that doesn't have the best spread, and I just account for that by adding 0.5 pips. So I enter based off reaction, so this is exact level that I'm currently in a trade holding from last week, obviously hoping it goes higher. So after I spot SMT, obviously I'll go through the entries a bit more, but after I spot the SMT, I quite literally just wait for EU and DXY to be in a valid point of interest. So for example, if we're looking at, I'll just get up on here.
What do you think about EURUSD, bro?
I don't trade Euro USD whatsoever. The only thing I trade is GBP USD. Literally the only trade. But yeah. So this SMT here, which is what I was looking for. When I say I enter based off reaction, I need to wait for the market to be in a valid point of interest on both levels. So for the pair that sweeps, which is GU for this example here, it doesn't necessarily need to be in an imbalance or a point of interest for us to buy off of, but what we need to make sure is that the pair that is that is not sweeping, that is respecting the low, must be in a valid point of interest. So for me, I waited for DXY here to tap into this 1 minute imbalance here before I actually clicked buy. But the millisecond it was in here, I waited for the tiniest bit of rejection on GBP/USD and I entered instantly. So yeah, that's sort of my methodology when it comes to the reaction entries in itself. But here's where I'll actually give last two trades proper breakdown. So obviously, like I said, we use 4 hour and daily levels for us to form our ranges and such. So when we're in no man's land, which is essentially when we've just broken a range high or low, and now we're pending, waiting for a new range to be created, we still work between 4 hour and daily levels for us to hit other daily and 4 hour levels for us to then create the ranges essentially. So this trade here, as we see, we have a 4 hour imbalance here. That was completely perfect for us to sell off of. I was aiming to hit this 4 hour imbalance down here, which then I was looking to create a range low within this 4 hour imbalance. And then from this 4 hour imbalance and the range low, we would then go to the IPDR and then we go to the PDR and then continue our bearish range, obviously. So within this 4 hour imbalance up here, dropping down to go to the 2 p.m. entry itself. Yes, it was a break even. I do not take partials whatsoever because my strategy is tested to do that. Obviously, it was a bit of a bummer hitting break even on this trade, but obviously it doesn't really matter realistically at the end of the day. So yeah, looking at quarterly theory and obviously the lower time frame in general, what we need is a sweep of a high for us to be able to continue to sell down. So for a sell side sort of market, we wanted to see Q2 high get taken out into a 1 hour imbalance just above, or we'd want to see the low get taken out and then we wait for something different. So essentially in this scenario here, we did not have the high get swept of Q2. So we understand if we do not sweep the high of the accumulation, we then have to wait for the continuation or reversal phase. So obviously the quarters go AMDX, accumulation, manipulation, distribution, continuation or extension. As part of my strategy, I like to see the high or low of Q2 get swept either way. So I quite simply assume every time that Q2 will always be the accumulation because it can change like so. But I like to assume that Q2 is always the accumulation. So by us sweeping the low here, we can either assume, okay, we could be continuing higher, or we're waiting for the continuation or reversal stage, because when we enter Q4 here at 3:30 p.m. UK time, we understand that continuation or reversal can happen like that. We do not need to see a high or a low of any quarter get swept. It is quite literally just waiting for our SMT. So for this SMT and entry here, obviously after forming your bias, understanding what quarter is going to get swept and what quarter we're currently in, we understand that we could sell directly off of Q4 because that is the continuation reversal stage, and our quarterly was not complying and helping us with our bias. We had to wait for Q4 because we had swept the low of Q2, and if you sweep the low of Q2 and you have a bullish bias, you could buy directly in Q3 with SMT. So as far as it comes with this SMT here, it was actually quite a precise entry for myself, but the way I viewed it was so. So this low here created this most recent high, and we did not get a close above this high whatsoever until this candle right here. So this was my current high that I was looking at, and in order for us to have a valid SMT, I want to see a high get, well, for bearish examples like so, I want to see a high get created, and then that order block that created the high, I want to see get closed below. So because we did not have this close here and we wicked that level, I did not take any trade. It was not a valid level. I waited for a new high to get created, or if we sort of pushed up here, then continued lower, breaking the low, then I could still look for SMT from the high here. However, in this scenario, as you can see, we continued higher, closing above this high, creating a new high. So this was the high that I wanted to look for SMT from. And while looking for this high for SMT, I was looking for a new low for us to break. And the low I wanted to see get broken was this low right here, as this is obviously the order block that created this little push up and created this new closure above the previous high. My entry wasn't there. It was still at 21, but it was over here. So as far as the SMT goes, we need the high to obviously completely match up time-wise. And when I say match up time-wise, as you can see here, I need to see it be bang on in line. As you can see, my cursor going down the middle of my screen, obviously is covering both of the highs there. So I noticed the sweep, however, we hadn't broken any structure. So we originally swept on DXY at 17 past, and as you can see at 17 past here, we had not broken any structure whatsoever. I then saw a re-sweep of that high, so it's still SMT because we're still respecting it on GBP USD. So I saw another sweep of the high, continuing high here, and by the time that we had re-swept this level here, I'd seen that we'd obviously broken the structure down below. So I understand if we break structure, we've swept liquidity, and time-wise the highs match up. I understand that obviously this is going to be a good level for us to sell from. So yeah, took this sell hoping for 24 RR. Came very close, but it's no problem. Yeah, that was Wednesday's trade. I've had a rather boring week for myself. I've taken 1, maybe 2 losses potentially. I can't remember if it was 1 or 2, but I've taken max 2 losses. I've had 2 break evens, and then I'm still in this trade from Friday here.
We have a question for the Friday trade also.
Go on.
Yeah, he says that it didn't react off the PDR, so is it valid? And does he think it will sweep Friday low before moving back up?
Okay. Well, yeah. I was going to explain this trade now anyway. So, essentially, like I said, when we haven't created a range yet, we tend to work between no man's land. And when I say no man's land, as in there is no solid range for a bias, we sort of just react off any sort of higher time frame levels. So this trade here, obviously it isn't a guarantee this will hit at all. I'd be very surprised if it actually did, due to the new week manipulation is very heavy, as in Monday will usually manipulate Friday very heavily, but obviously I'm going to stay in it either way, just in case of that scenario, just in case that scenario doesn't play out. Sorry. But yeah, Monday is very, very manipulative of the previous week highs and lows, or the previous Friday's highs and lows more specifically. So I would not be surprised if it swept my low down here into the 4 hour imbalance, and then we finally actually formed a range. However, the way I viewed this from the 2 p.m. open, this candle right here, I viewed it as, okay, we're working between 4 hour daily levels. We've just entered this level here. And if we zoom in a bit, obviously you can see the 10 a.m. UK time candle closed while rejecting this 4 hour imbalance. So we understand, obviously, if it's rejecting this imbalance and it has not closed within it, it's most likely going to hold. So this 4 hour imbalance here was enough for me to start looking for buyers. As far as the target goes, being all the way up here, aiming for a 90 risk to reward. However, I'm going to cut it early here. I'm helping a student pass his phase 1 and actually revive it. I'm not going to bait out who it is. He may or may not be in the call, but serious over trading problems. So I'm trying to revive it for him at 40 RR, I think, which revives it and passes it. But anyway, the reason for the target being up there, not actually very confident in this trade in itself, but obviously that's just due to it being a new week. We saw that this order block here got hit at 6 a.m. On Friday. So for me, that completely mitigates this level, and this level can no longer be used. So in the scenario where the 2 p.m. candle opened into a 4 hour imbalance down here, like I said, we are then now going to buy up to the next valid point of interest. And the next valid point of interest will not be this level again, because we'd already hit that at 6 a.m. I wanted to see the next 4 hour or daily level possible to get mitigated. So obviously looking on the daily now, this is clearly all just low resistance liquidity, and what that essentially means is it should have no problem taking this whole level here, and obviously there's a daily imbalance up here. Going back down to the 4 hour again, you can see that there's no point of interest at all within this area here. So you can see the process of mitigation is in this being the current high getting mitigated here. So this mitigation here essentially destroys any valid area to sell from in this level. So by mitigating it, and again this imbalance here getting mitigated by this candle here creates a lot of very easy liquidity for us to take when we start continuing higher, hopefully. And you can see obviously how the highs sort of move, as in there's a high getting created here and there's another high that gets created very close to it, as in this high gets created here and another high gets created here. You can see there's very small spaces between the highs that are getting mitigated. That obviously shows that it's leaving no room for any sort of mitigation, and this whole level is going to be like a land sweep, completely taken very, very easily if we continue higher, obviously. But yeah, I'm hoping to hit this 4-hour daily level up here. Let me draw it out. So the way I'd like for it to sort of push up, I don't know how long it would take for it to push. I doubt it would be in one day. It'll most likely take a couple days, maybe 2-3 days anyway. But if we start pushing up like so, say this is the 1 hour time frame. If we push up like this, I understand that obviously now we've hit the 4-hour slash daily sort of level. This is the range I'm going to be working within, because we've swept a 1 hour low, we've broken structure, and now we're in a valid level for us to then start working between our internal range to our external level range before continuing and breaking structure and continuing the range like so. So that is what I'm looking for in the new week at the moment. Obviously it depends on the new week opening gap as well. Depending what happens when the market opens tonight, we could either open a bit higher up here, we could open exactly sort of in that still range level, or we could open below my stop loss and I will get absolutely liquidated. But yeah, let's not hope that happens. But that is my sort of prediction for next week so far. Does anyone have any questions on that before I continue on? Hugo, if they type anything out, let me know, please.
Yeah, we've had some questions, but we have gone. I can tell this one. Do you wait for any 4-hour opens besides the 2 p.m.?
No, I do not. A few students trade the 10 a.m. One at the start of Q4 for London, but I don't personally at all, because I find that one can there's a lot more consistent break evens, because obviously 10 a.m. By the time you've entered that trade an hour later, it then starts to move into New York, and then there's obviously more manipulation, so it tends to be more break evens at 10 a.m. But 2 p.m. just sort of fits me right as well. It feels a lot better.
Do you trade the funded or live accounts?
Both. A big mix of both.
But boy.
Any other questions?
No, I don't think so. Ollie's typing now. Let's see.
Cool. I'm just going to read out the ones from general chat. What are the most important learnings which impacted your trading journey? There's nothing really specific. Obviously ICT in general, because I never sat down and religiously actually watched ICT himself. I just watched loads and loads of simplified ICT, and then sort of used what I got from that to start trying to understand sort of where the market's heading first of all. So there's not really anything that's the most important. SMT is like a massive one, because obviously that shows manipulation in forms, as in like it shows the algorithm physically manipulating the market, which I find really interesting. Obviously that's a very, very big hint of reversal. A lot of people say enter on SMT, exit on SMT. I don't exit on SMT, but obviously my entry is literally based all around that. So SMT is definitely a very big one. IRL to ERL, which is essentially imbalance to liquidity, which is the only thing the market searches for, is very, very key. I don't trade that religiously, however I just trade a variation of it. I'm sure you all know by now that every single strategy in the market is quite literally just copies, replicas, rebranded stuff of other people. So even though I didn't learn what I trade now specifically off anyone, I use different combinations of things that I obviously loads of other people trade from. I've just sort of pieced it together myself, knowing a lot of strategies in my head, and then sort of experiencing which one suits what, like which one of them like sort of complements the other. So obviously you want to have some form of time sequence within your strategy, and I like to use quarterly theory and the 4-hour candle for that, because they link in very nicely for myself. But yeah, every single strategy that you guys will ever see is literally just rebranded and just reconfigured essentially to suit the needs of the person trading it. So obviously this is perfect for me because it suits my mentality. However, A few of my students trade futures and stuff like that. They've taken bits and pieces from my strategy, shaped it and added it to other bits and pieces of other strategies they've found. So it's all just random combinations. So there's nothing specifically that is the most important, because you can always piece it together with different things. Like, as in, you could use my entry model with a completely different method of finding bias. You don't have to use quarterly theory. There's multiple things that sort of go into it. How do you deal with psychology? All right, Shiv, unmute your mic, boy. Speak to me.
Yo.
So what specifically in psychology is in, like, over trading? What do you suffer with?
Basically, when you face a loss, like, how do you stop yourself from revenge trading and like increasing your lot size? Like, that's what I suffer. Well, yeah.
Well, increasing your risk size will go quite easily. As in that how like deep are you into your trading journey? Like, how long have you been trading for?
About a year, I think.
Cool. So as far as it goes to increasing lot sizes and stuff like that, you very easily will learn that is literally just going to shove you down the drain, and it will not help you whatsoever, because you understand, obviously, if you're revenge trading in the first place, that is going to be a much bigger problem than increasing your lot size. And if you're increasing your lot size and over trading, you understand your account is literally going to be gone within a day. You like a lot. I'm not saying this specifically to you, but obviously it applies to everyone here and every like trader in general. But you need to treat it like a sort of competition. You need to realize as well that you will not make even £5. You will not make any of the money back that you've already spent on funded accounts whatsoever if you're still fucking up your psychology. And the way that I sort of fix my psychology, so I have a friend called Luke, who I was an admin in the server for quite a while. I didn't learn from him, but I was an admin with him, good friends with him, still speak to him now. And I sort of treated his server like a competition, and I sort of came in like day in day out, just thinking, okay, I want to be like the best here analysis wise, and if I'm the best here analysis wise, obviously the money's going to come with that. So treat it like a competition. You should come in here, and when I post my bias, if you have a completely opposite bias, you should be thinking, I'm going to stick to my own bias, and I'm going to hope that I screw over everyone here. I hope I have the best analysis of the day than everyone. I hope I have the best trade of the day compared to everyone. You just need to treat it like a game. Once you start treating it like fucking Call of Duty, you're trying to get your KD up. Once you treat it like a game and come on every single day realising that you will not make money at all if your psychology still affects you, and you need to realise that you're literally just competing against loads of other people in a good community, especially if you're in a non-toxic community and you're just getting it right a lot more than all the other people in there. You're just going to naturally improve, because you realise that you're not necessarily doing it directly for yourself, but you're doing it to prove everyone else in the server and everyone else in the community that you can have better analysis than all of them, and you are on like a better path than all of them. Essentially, that's the main sort of way that I got over it. Obviously, no matter whatever anyone ever says, I've been training for maybe like 3.5 years now. I still have psychology affects me. Like, I try and take one trade a day. Sometimes it's two. Obviously, every few months or so, I might do something really stupid and maybe take like 5 trades in a day. But that's when you sort of pattern up the day after. Once you sort of get your strategy straight, and you start being patient. Patience is the sort of key to it. Overtrading won't be that bad if you still have your patience. So, for example, if I entered the trade here, which I did, and it slips me out, and I directly enter again, that goes against my rules, because I literally I'm meant to only take 1 trade per day. That goes completely against my rules by taking that second trade. However, I understand that my analysis is correct, and over a certain amount of time, the overtrading can be tolerated if you still have the patience to wait for every single check mark of your strategy, essentially. So once you get your strategy patterned and you sort of learn the patience to wait for like simple things is the key to not overtrading, because I used to overtrade because I'd be seeing my entry model play out not even in a point of interest. If you mark out your points of interest, set your alerts, walk away for the day. The second your alerts get hit, you can sit down. You could probably take 5 trades, 4 losses, 1 trade, but because you've waited for that point of interest to get hit, there's a higher chance that you actually end up winning one of those trades. Obviously, I'd never take 5 trades in a row like that, but do you understand what I mean? It's the simple things like waiting for a point of interest to get hit, which will be the complete difference between overtrading and not. Does it make sense, Shiv?
Alright, thanks.
No worries, no worries. One sec, Hugo. I'm going to see if there's any more in the free chat from earlier. Am I going to show my pubes or not? Maybe after. Maybe when I stop recording. I got a question. The trade Tommy Friday. Oh wait, no, that one's already been asked. Go on, Hugo. What's the question?
Yeah, we have a question. Do you have specific rules for SMT?
Yeah, so quite literally the only rules for my SMT, which I stated earlier, it's the same as my protected highs and lows for my external range. So I use the same protected sort of check marks for the external as I do for my SMT levels. So more particular, they have to match up time wise for SMT, as in the candle high or the candle low have to match up within the exact same minute. If the high of DXY is a minute after the high of GU, I will not use that high whatsoever. They have to match up directly like that. And that high has to have swept liquidity and broken structure. It doesn't have to break structure directly. It just has to be the start of the move that breaks structure, if that makes sense.
What does your risk management look like?
My risk management in itself, I'm currently risking 0.25%. On every single account. I used to risk 1% on my personal account, and I'd do that in every single trade. I've sort of scaled down a bit because I had a very, very bad January. Well, to be fair, I managed to still get through to February with 2% win, but I had 18 trades, 18 loss, losing streak, sorry, in January, so I sort of scaled down a bit from then, narrowed in more on the 4-hour candle open, because I only added that maybe a month and a half ago, 2 months ago, but narrowing down on the 4-hour candle open itself has dramatically increased my win rate. Obviously the strike rate of the trades, as in how often they appear, have decreased a little bit compared to my strategy before the alteration. However, my win rate has dramatically increased just based on that, because the 4-hour candle alone retraces or extends no matter what day it is. So it's definitely helped me. So my risk management is a lot better now than it was last year. Obviously, I was still profitable last year. I've been trading the same strategy for 2 years on live, and then I've sort of altered it within the past few months, not significantly, but just enough for me to narrow in more to increase my win rate and decrease the amount of trades I'm taking myself. Yeah, it's quite good. I like risking 0.25% as well. Feels a lot better.
Do you use weekly profiles at all, such as?
No, I do not use weekly profiles whatsoever. Literally just whatever my bias is on the intraday scale, that's enough for me.
Would you recommend trading at 10 or 6?
I would not recommend trading at 6 whatsoever, because you can get entries at that time. I'm going to assume you're talking about 6 p.m. UK time. If you're talking about 6 a.m, I wouldn't either, because the 6 a.m. obviously you then have London Open directly afterwards. So with the Frankfurt Open at 7 and the London Open at 8 a.m. UK time, you just tend to see manipulation so quickly. So I wouldn't do 6 a.m. With 6 p.m, I wouldn't do that either, because within a few hours, it will start to move a lot slower, because obviously working day is now done, so the market's going to have a lot less volume. Who just sort of hang around for a bit, and then obviously it goes through spread hour, which then will most likely take you out with slippage, which just obviously isn't fun. So the 6 p.m. itself, it can be hit or miss. Sometimes I'm sure you can have a good entry on that, but it's just not worth it, because it'd be a lot more rare. 10 a.m. as well, I haven't tested at all. I've just stuck with the 2 p.m. one the whole time, but I see a few people hitting quite nice trades for the 10 a.m. one, so obviously use that at your own discretion.
Can you explain what you mean by the 4-hour candle?
So the 4-hour candle, obviously at every open you'll see some form of manipulation. So a lot of people use the open, low, high, close sort of strategy when it comes to the 4-hour open. However, I don't strictly do that myself. So a lot of people view it like so. So if we have the open right here and we push higher, a lot of people think that we'll then close a bearish 4-hour candle like so. However, I do not trade the actual push up like so. I trade the manipulation. The manipulation could essentially come lower like so, see some form of manipulation, then continue lower. But I don't need to see us push higher than the candle opening itself. That's what a lot of people trade, but I don't necessarily do that. What I look for is when quarterly theory aligns with my bias, then I wait for the 2 p.m. open like so. I wait for a form of manipulation, and a manipulation for me is literally any like 1 minute low. So this is low that obviously got manipulated with this downward move here. So you see the manipulation, you see the SMT, and that is enough for me, because the 4-hour candles sort of have a breather with a bit of an internal sort of manipulation, and obviously SMT starts and ends pretty much every move. So if we see SMT in line with our bias during the manipulation of the 4-hour candle open, then it's perfect, obviously. Hugo, next question.
We got one now. Is day trading your main source of income, or do you also have a job at
So I dropped out of uni at the very beginning of last year. I was just making 4-figure trades, as in like not consistently either. I literally had my first 4-figure trade, and then immediately dropped out of uni because I was going to fail the year anyway, because I just didn't bother with my course whatsoever. I've been trading quite literally since then. I started trading at the very end of 2021. Started trading live in December 2022. Been doing that ever since then. I do have an Airbnb. I don't own it. I do rent to rent. I've been doing that for 8 months now, I reckon. I almost had a second Airbnb secured. However, obviously that fell through because the lady that I was going to be doing rent to rent with ended up getting a financial manager that recommended a different payment plan. So yeah, I have that on the side, but day trading is literally my main source of income.
A lot of people have asked why Kosse is better than you at Fortnite.
Well, it's not Fortnite.
That's it. He's getting banned. Yeah. Luke, mate, you know you're unmuted, dumbass.
I mean, can I ask you a serious question?
Go on. Yeah, wait, one more. Do we still use OBs in extensions?
Yes, I'm cheating.
Luke, go and mute you muppet.
Shut up, Luke. Shut up.
Idiot. Serving
Shut
you.
up, Luke.
Shafted.
Nah.
Do we still use order blocks and extensions? If you're talking about the 4-hour and daily levels that we can extend to, then yeah, we use any sort of form of 4-hour and daily point of interest for us to form a range high or low.
We don't have any more questions at the moment right now.
Cool. Well, I'll sit here for a few minutes. If anyone has any other questions, type it in the chat. Obviously, you can unmute your mic and just ask it now. If not, this will be the end of the webinar. Does it clap? That's a great way to end it.
Ollie asked you a question, Tommy. He wonders if you subscribe to James Charles OnlyFans and if it helps you trade.
Don't listen to Ollie's question, guys. He's the type of guy to... Well, no, he's not even the type of guy. He is the guy that will come on camera and just start flexing to a group of boys.
What the fuck?
Does it scratch? Yeah. Cool. Am I planning to compound my personal? Yes, I will continue to do so. Can we free in Fortnite? Yeah, run it. Do I live in London? Yes, I do. I live in South East.
Who's your favourite admin?
Who's my favourite admin? It's got to be Hugo. It's got to be Huggo.
Yeah.
Nah, fuck that.
Nah, I'm Zeno. You're getting too big for your boots.
What do you mean?
Cool. Well, I'm going to end the webinar now, boys.